Hey everyone, welcome to today's video. We're going to talk about Nio and my expectations for 2025, both in terms of number of deliveries, but as well, more importantly, the financial outlook and how that possibly is going to affect the stock price. We can see that the stock price did not have a great 2024, down 50%. Not a great look, but the question is, will next year will be better? And to answer that question, we need to see if my models for delivery numbers are realistic to start with. And we can see here that there is a Chinese New Year, I think this time in end of January and early February. According to this web page, it's from 28th of January to 4th of February, around let's say eight days or so, and that's gonna affect the numbers of cars delivered in January and February a little bit. As we've traditionally seen, it's a little bit difficult to get a strong start for Nio, but as well for most of the companies as well. This phenomenon affects Tesla and Xpeng and everyone else. So this is nothing that's specifically affecting Nio negatively. But yeah, so I think my of the 12 bars that are gray for next year, there is most uncertainty in the beginning and in the end, I would say. There's potentially, there's room for that we would improve more than 40,000 cars in December of next year. After all, we are on our path to do 31,000 this December. And with Firefly and Onvo ramping up for more than, let's say, a year and half a year for each of them, it could be easily, just 30% increase. That's not a whole lot asked, to be honest. But yeah, so that's my numbers for now, and we can see that maybe that January at 25,000 is a little bit too low. Remember that their goal is to having 16,000 for Onvo, which means if they achieve their goals of 16,000 Onvo deliveries in January, the rest of Nio car combined would be 9,000, and I think that's a little bit too low. So I wouldn't be surprised if the January number is close to 30,000 and maybe February a little bit slow. And then of course we don't know, how the competitiveness looks like. When will the Tesla Model Y, the updated Juniper model, enter the Chinese market, and will that affect Onvo, and how will that affect Onvo? But that's at least my expectations, give or take 400,000 cars for Nio. And if you're telling me that before, right now, that in 1 year's time they're gonna do close to 500,000 cars, I mean 400,000 is not really there, but almost in the same ballpark, I would be very happy, at least in terms of output and delivery. Now going to the more important stuff, the metrics and the expected earnings. Remember that I had to revise down my Q4 expectations in terms of numbers a little bit. I'm a bit insecure about my numbers, to be honest, because we know that they guided for 2.8 to 2.9 billion in revenue. So the top line is, probably very close, because they guided also 72 to 75,000 cars, and my own expectations is exactly in the middle, basically. So I wouldn't be surprised about the absolute number for the revenue. Now, how would that divide look like between vehicle sales and other sales, including battery swapping? I think that battery swapping, the other sales, will be close to 300 million, and that leaves us with our vehicle sales of 2.6 billion, unless they surprise everyone and come in at 3 billion or so. But for the moment, let's go with the 2.6 billion for vehicle sales, and that raises a little bit of a dilemma for me, because if you increase the cost of sales just around the same ballpark, let's say 10%, and and then let's say the cost of vehicle sales by 11%, because they are ramping up Onvo production and Nio ET7 and so on, that leaves us with a gross profit that has barely changed compared to Q3, despite the vehicle deliveries being 20% higher than Q3. And that would leave us with an income or loss from operations at around very essentially same ballpark, at 668 million compared to 768 million compared to 746 in Q3. Now, I have to say there's a lot of uncertainties in this. I don't think the uncertainty is going to come from the revenue or the divide between vehicle sales and other sales. Probably the operating expenses will also be close to, let's say, 1,050 million to 1.1 billion. I would say somewhere there. Not because they're not going to increase the R&D expenses a whole lot. it's gonna be probably below 500. Maybe SG&A could be a little bit higher, let's say 640. That's possible for sure, but I don't think so. Considering that operating expenses should also be in this, rough ballpark. Everything that's gonna be then let's say uncertain right now is the total cost of sales, and that one is a little bit difficult to know, and that's gonna affect the margins as well. Now, with the numbers that I have went on, again, increase of vehicle sales, cost of sales by 11%, on the top of roughly 19% increase in vehicle deliveries. So if you consider all of that, and you consider R&D and SG&A being the same ballpark that we had in Q3, that leave us with a gross margin at 10%, which is a little bit of a regression. And I don't know how I should look at this, because in order to have an increasing gross margin to, let's say, 11%, so 1 percentage more, 1 percentage unit more compared to my own models right now, which I have revised down a little bit. Remember, for the left column is at 11.8, which was my previous numbers for Q4, which I expected to have, let's say, closer to 3 billion in revenue. But it seems that they are increasing vehicle sales, but the average sales price is going down a little bit faster than I expected. In fact, if you look at the revenue per sold car, would be at 35.3 billion, which is 35.3 thousand US dollar, which is roughly $3,000 less than Q3. I mean, the logic behind that is that Onvo is ramping up, right? So Onvo is ramping up. It's a cheaper car compared to the traditional Nio brand, hence the regression in revenue per sold car or average sales price. And hence also, maybe the not so great look for the gross margin. But again, I could be wrong. It could be that they have better control on cost of sales, and it's possible that the income or loss from operations is closer to minus 700, whereas right now my models are telling closer to 770. And that's a substantial 10% difference that could be made up if they get their their cost of sales together. So let's wait and see for that. But then if you zoom out a little bit and go into, we are here for, after all, 2025 deliveries and let's say revenue numbers that my models are telling, and those are based on 84,000 for Q1, 90,000 deliveries for Q2, 100,000 for Q3, and 110,000 for Q4. Now these are again rough numbers, right? So are these rough numbers for expectations of delivery numbers for Nio, with room of improvement, especially in Q1 and Q4? I mean, for all we know, if they getting close to 40,000 already in, let's say, Q3 per month, we could see 120 to 130,000 deliveries in Q4 of next year. But all that matters is also how the operating expenses is going to increase. Now, I taken a kind of little bit of faith in Nio's management, so I'm thinking, let's get control over the R&D expenses. Let's see if they manage to do these 4 numbers here, which are again, for Q1 of 2025 through Q4, where I expect the R&D essentially to not move that much compared to this year. Although the SG&A would obviously, it has to increase a little bit, right? Because of the higher deliveries and sales. Could say that maybe I'm a little bit too conservative on the SG&A, but in any case, the total operating expenses, I would say that at 1.2 billion would be the absolute top for me right now. So that's good, if they're increasing their sales by almost 80 to 100% next year, whereas their operating expenses increasing by 10 to, let's say, 30% in worst case scenario. So that's good. Then we're gonna see the leverage of higher numbers, of higher production numbers. Gross profit would be in the same scenario, maybe not increasing at the pace that we would have wanted, but at least it should double. We should see gross profit over $500 million US per quarter, at least for Q3 and Q4 next year. But again, that's not all, right? Because we also have the cost of sales, and that one is so difficult for Nio to understand and to have a model about this. And I just went, with these numbers here, high single digit increase in cost of cost of vehicle sales, and a little bit less for cost of other sales, because the swap infrastructure is slowly but surely becoming more productive, and it's costing the company a little bit less for each single day and each single quarter. So I would say that the biggest unknown right now for me is cost of vehicle sales. And please share your ideas. Do you think that I don't know, like a 3 billion cost of vehicle sales, which is 700 or so million higher than expected cost of other sales for Q4, and maybe a full 1 billion more than Q3 of this year, which was the last reported numbers, based on an increase from 61 to 62,000 deliveries in Q3 of this year to 110,000 deliveries in Q4 of next year. Essentially, more than well above 50% increase in deliveries. So I don't know if that's realistic. Let's say 60% increase in deliveries, 70% increase in deliveries, but we have a 50% increase in cost of other sales, which points to the company becoming more efficient also on the cost of sales, which is good. At least that's my base case scenario right now. And if you all of this together and look at the net loss, which is the important one for me right now, I think we are getting below, or at least very close to around $500 million net loss per quarter, which is a significant improvement compared to what we are right now, which is in the high 700s. So it's a definitely improvement in terms of net loss, and that's gonna probably be visible in the stock price, because that reduces the risk of another raise. We can see that the Nios cash position, if my numbers are to be trusted, are gonna go from the latest numbers that was reported at around $6 billion to 3.5, with a substantial slowdown in net loss as we go through the 2025 quarters. And obviously, if you go beyond 2025, I think Nio will start to become profitable by end of 2026 and early 2027. That's now only 2 years away now. But again, we never know with this management. They might get newer plans with, insane kind of build out of the infrastructure or the battery swap stations. As we see here, we are already past 2,900. Like literally 1 week ago, I was updating my numbers to 2,850 or so, 58 maybe. And then in 1 week or so, they just added another 40 or so swap stations. And yeah, in the long term, that's good. But in the short term, I don't think it's the best use of Nio's capital. But that's what they have decided to do it like that way. At least we know that the average daily swaps per station is slowly going up, but it could be much faster if they put on the handbrake and let because we can see that the daily swaps combined is well over 84,000 now. But because of the increase in number of swap stations, the number of swaps per station per day is obviously not going up as much due to the increase in number of swap stations. So that's just how it is, and these swap stations cost quite substantial. And we know then if you just follow some other, I try to, for example, look at these stories out there saying that Nio ET9, so the big car that they're gonna have for executives with high margins, costing a lot of money to sell, probably 25-30% gross margin on that one. So that's nice. We know that they sold 1,000 of them very quickly, but there are newer rumors now saying that they're up to 3,000 sold per in the first 72 hours. That's great to see, but then again, we would need to have these kind of numbers if true, month in, month out, and that's we have to wait and see. We've seen other cases where Nio launches a new car and within a year they're barely selling any of those. So that's also the possibility. So going back to the beginning of the video, I asked the question, is 2025 gonna be better year for Nio? Difficult to say. I think in terms of deliveries, for sure it's gonna be like, and it's actually been this way for Nio over the past 4 years. If you look at their numbers there in green, going from 40 to 90 to 120, 160, and now maybe 220, 230 or so cars in 2024. And probably close to 400,000 next year. That's never been the issue for Nio. They're growing very fast. Problem for Nio has been, to control the cost as they grow, right? And that's been an issue that sadly Wall Street currently doesn't like. I would find it hard to think that this company is gonna be at 9 billion, 8 billion, or 10 billion market cap this time next year. Why do I say that? Well, looking at my numbers there, we can see that combined revenue for 2025 should be something like, if you add all of them together, so if you add these 4 columns together, I think we are gonna see, let's have a quick napkin math there. That's 9 billion plus 4, that's 14 billion, and then we have 1 there and 2 there, that's 15. Now, let's say 15 to 16 billion in revenue, right? They're gonna have a price to sales ratio closer to 0.5. So yeah, I think that's a little bit too harsh. But then again, the market maybe still is not sold on Nio by, this time next year, if they don't manage their control. And remember, I have to warn you guys that in Q2 we saw somewhat of an improvement in net loss, right? They went from 747 million in net loss to 760. That was a great improvement. I expected, based on improved numbers in deliveries, which we saw from Q2 to Q3, that we would see somewhat of an improvement again, even in that quarter. But then it kind of regressed back up again, so the loss increased again. So we cannot just say that I'm very realistic with these 4 numbers there, right? I mean, that's my goal, that's my rough estimations, with the caveat that I have no clue about the cost of vehicle sales right now. I'm trying to look at some historical numbers and try to be realistic, but these are very wild guesses, right? And that's, I think, again, the operating expenses is more easier to understand, but the cost of sales depends on so many moving parts that it's very difficult to predict. But again, there's a possibility that these numbers that we are looking at now could be easily 100 million more each quarter, and that's $500 million more in net loss than I'm expecting. And yeah, that's gonna obviously affect the company's stock price. But for the moment, we know that they're executing well. Again, there is no way to criticize the management in terms of delivery numbers. Although it's maybe not always a smooth sail, they're definitely increasing very, very efficiently. We are probably getting to 400,000 next year, which is, I would dare to say that it's gonna be 20 to 25%, maybe 20 to 22% of Tesla's next year's sales. So Nio is catching up with Tesla quickly. You add to it that Xpeng is probably gonna also, because they're gonna deliver way more than 200,000 cars next year, probably also closer to 400,000. So Nio and Xpeng, by this time next year, I wouldn't be surprised if they did close to 40%. In best case scenario, close to 50% of Tesla's numbers in terms of the vehicle delivered, right? So something's obviously going in the right direction. Question is, do you bet on Nio? Do you bet on Xpeng, on Tesla, or all of them? Maybe you share your capital in all 3 of them. I don't know. I just think it would be a wise choice to at least somewhat be exposed to Xpeng if you believe in the Chinese EV companies, right? Because they seem to have a little bit more control over their net loss, and I think they're going to be profitable at this current stage with the data that we have right now faster than Nio. So I would say, let's hope for the best, but let's also prepare somewhat and look at the other options as well. And right now I find Xpeng also interesting, to be honest. So that's gonna do it for today. Thanks for watching throughout this year, and appreciate a lot the comments and everything, and have a great New Year's of 2024, and see you next year.